Thank you, everyone. Thank you for joining us today for SFA Grow Your Business series. This is the third episode, and we would like to explore the fintech development in Hong Kong. And today we are grateful that we have our in-market experts, Invest Hong Kong and Fintech Associations of Hong Kong together with us. And it's my pleasure to be the MC today. My name is Eunice, and on behalf of Singapore Fintech Associations, I would like to extend a very warm welcome to all of you. We appreciate you taking time off your busy schedule to join us today. To begin with today's sessions, we are pleased to have Ruben Lim, our Chief Operating Officer of Singapore Fintech Associations, to deliver the opening remarks. Over to you, Ruben.
Hi everyone, good afternoon. Thank you, Eunice. Good afternoon to all my friends from Singapore, and I believe we have audience from Hong Kong as well. Thank you for taking time to join us today. Now, it's just basically between me and the experts that we have here today to share more about Hong Kong market with you. So I won't take up too much time. I just want to share with you 3 quick points why I think today's session actually is going to be very, very important. First point I want to talk about is actually the regulatory body in Hong Kong. So Hong Kong is fantastic and it's really, really very forward-looking. Helmed by Hong Kong Monetary Authority, they actually created a fintech taxation office back in 2016, and all the way looking forward right now to today, starting as early as in June, to the creation of a fintech 2025 strategy, where they want to encourage Hong Kong financial sector to comprehensively adopt fintech solution by 2025. And I think this, what I just shared, really is a very quick scope from 2016 to where they are in 2021. Within 6 years, it has shows how much of the things that the Hong Kong regulatory body has been doing, and so forward looking to 2025, where we want to bring every solution on board to financial institution. That is one point that I want to highlight to share how forward looking Hong Kong is, and with the support of such a great monetary authority, it is really a good place for fintech to be looking into, not just only for Hong Kong companies, but also for Singapore companies to be looking into the space. Second thing I want to highlight is, of course, the geographical market, because in and of itself, Singapore is generally very small, so that goes without saying. Whereas in Hong Kong, notwithstanding Hong Kong shares similar geographical conditions to Singapore, but it actually has a combination of a Greater Bay Area metropolis, and with a city cluster of more than 80 million population and a GDP of more than US $1.67 trillion, that is an enormous market. Where I feel that it actually presents that there are a lot of possibility. And I think one thing I want to highlight is that this is where I feel that between Singapore and Hong Kong can actually come hand in hand, because Singapore has served as a springboard to the greater ASEAN market, and Hong Kong with the Greater Bay available. So there could be a lot of cross-pollination where we can have both the fintech companies and partners working hand in hand to see how we can bring solutions, cross-pollinate, and capture both the market together. And last but not least, I do want to highlight all the success cases in Hong Kong, as well as the and also in terms of the way the ecosystem is being very open to celebrate fintech. And that also through a couple of examples I have in Air Wallets and WeLab. So these are 2 of the unicorns that have been very successfully raised funds and shown successful use cases that has gone beyond Hong Kong into the other countries. And more importantly, with Hong Kong Fintech Week coming up on between 1st to 5th, it's also a very strong sign to show how Hong Kong celebrates fintech and how fintech is widely embraced into the whole ecosystem. So with all the 3 points that I highlighted earlier, I strongly feel that there's a lot of opportunities that presented between Singapore and Hong Kong, and I strongly hope that through a session like that, we will be able to share more of the potential that Hong Kong has to share with the larger market. And for SFA, we'll be working closely with our counterparts through Helen and through the Fintech Association of Hong Kong. We will try to explore more opportunities for both our members. Back to you, Eunice. Thank you.
Thanks, Ruben. So I would like to invite all the audience here today with us. You feel free to drop your comments or questions at the Q&A box at the bottom of the screen at any point of the time. And we will hold your questions towards the end of the discussion sessions, and we will invite our panelists to answer your questions accordingly. Okay, and now I would like to hand over the floor to King Leong, who is the head of FinTech from Invest Hong Kong, to share with us the overview of FinTech development in Hong Kong and the opportunities ahead. Over to you, King.
Thank you so much, Eunice. And again, thank you for the kind introduction by Ruben. I think you have really done a great job in sort of summarizing, I think, some of the great work done, in fact, by my predecessors, and also a lot of folks who built up Hong Kong FinTech foundation from scratch. Now, so before I go into some of the material I prepared for the audience today, I just want to highlight one thing. Because at Invest Hong Kong, we are the primary window to connect with international entrepreneurs and fintech leaders. So naturally, we track some of the statistics. And interestingly, over the past few years, Singapore has consistently ranked in the top 5 in terms of number of fintechs coming into the Hong Kong market. And this is something that is not by accident, because as we talk to the entrepreneurs from Singapore, I think the common feedback that we got was that the Hong Kong working environment is just so similar to Singapore that, I mean, it just felt like home to do business in Hong Kong. And this is, I think, one of the major reasons, aside from the fact that we are IFC2, that really make, I think, the Singaporean fintechs feeling that this is actually a good place to be as they expand outside Singapore. Now, so without further ado, perhaps I just want to start with one thing, and that is the market sizing. Now, naturally, when we look at Hong Kong as a market, essentially, when we look at the sort of IFC status, that lends itself very well to be a good B2B market, because there's just so many financial institutions in Hong Kong. And I won't go into details, but basically the numbers are all here on the slide. So you see basically across the board, from asset management to banking, insurance, the securities firms. If you add up all these numbers together, you're really talking about like thousands of financial institutions. So if you are a B2B fintech, that's great news, right? There's just so many companies you can sell your solution to. So this is a good starting point. Now, at the same time, in case you wonder, what is that sort of distribution in terms of the different major players across the different segments? And as you can see here, based on the ecosystem we have, around 600 plus fintech associate organizations, we have a pretty nice mix. From, let's say, the 1 o'clock, 2 o'clock, angle of the pie chart, you got the RegTech, basically going clockwise from the credit tech, digital assets, insurtech, payments, trade finance, wealth tech, basically all the major segments you would expect. We have some players in those segments as well. Now, but then at the same time, as Ruben pointed out, our regulator, HMA, have set a very bold statement and strategy that all banks go fintech by the year 2025. So that is not optional. It's actually quite mandatory that they have to look at every single aspect of how to enhance the digital readiness of the banks. So that's why we do see that I think banking related fintechs would get a lot of traction based on both market demand as well as I think some of the market forces I think behind the push by regulator as well. Now, another aspect that is pretty characteristic of Hong Kong is the fact that we are also a great pool, a great place to raise money. Now, when we look at the private capital, actually one thing that I was surprised was that as we reach out to our colleagues at PwC, who helped us to do a study on the capital flow, the one thing that, in a way, I was a bit pleasantly surprised was that of the all private capital in Asia Pacific, Hong Kong ranked actually number 2, that right behind our motherland, in mainland China. So we contribute roughly 14% of all the private capital available in Asia Pacific. So again, from the early stage of the angels, the VCs, the PDs, and so on. So that amounts to $170 billion US dollar. So this is pretty substantial. And of course, I think the IPO market in Hong Kong has been doing really well for the past 12 years, that we've been ranked number 1 in terms of the liquidity of the Hong Kong Stock Exchange. So fundraising is another good factor to help the fintech firms to thrive. Now, if we really want to narrow down a bit, you ask me, okay, so King, if we were to look at, I think the segments of fintech that get a lot of traction, a lot of, I would say, tailwind, what would that be? Well, I think the short answer I have for you, particularly if you are in B2B, then RegTech, no question. This is definitely a very hot space with a lot of tailwind behind you. Now, one of the reasons is because of the push by our regulator and HMA and also the de facto central bank that basically pull a lot of weight, that they have laid out this 2-year roadmap of RegTech adoption across a number of subsectors. Now, at the same time, when we look at a study conducted by KPMG in collaboration with HMA, actually we recognize that 1/3 of the survey banks actually have not adopted any modern RegTech solutions. So that means 2/3 of the banks are ready buyers of RegTech solutions. Okay, so again, this is an enormous opportunity in the upcoming years. Now, another aspect that is of interest, perhaps particularly for today's audience, is in the wealth tech space. Now, the one thing that, again, when we look at the statistics, we was like, wow. Actually, we realized that actually Hong Kong is ranked number 5 in terms of having the highest number of super or very high net worth individuals, and also in terms of the multimillionaires, we have over 500,000 of them. And this is why, because of all these high concentration of wealthy people, and this is why a lot of the major banks have really pivoted themselves to put a lot of resources to try to grow the pie in not just Hong Kong, but also, as Eunice and Ruben mentioned, the Greater Bay Area, the opportunities within the Southern China region. So that's why, as you can see, like Citibank, HSBC, Standard Charters, they've been increasing the headcounts for the GBA market. Many of them are based out of Hong Kong to service this emerging wealth class. So again, very exciting opportunity in the wealth tech space. Now, I think one step further, you may ask, well, this is great, but this is sort of like high level, 30,000 feet. So what's the call to action? How can we get started? Well, actually, we'll spend some time to really map out the ecosystem in Hong Kong. We recognize that actually a good number of organizations are working hand in hand to offer this kind of business introductions, business matching kind of programs. So from the sort of top right, the Hong Kong Science Park, which is a great part of ours. Of course, in West Hong Kong, there's our port, Accenture, Betatron, ESG, Zurich, and goes on. So all these are essentially business introduction programs. So they have, on the one hand, the corporate partners. On the other hand, they're trying to work with the fintechs like yourself to connect you with potential clients in the FI space. Now, the one that Invest Hong Kong that my team is responsible for is the this Global Fast Track Program. So this is the second year that we run it. And we've been very privileged and very happy that we got the support by the ecosystem. So far, we got actually like 80 plus like corporate champions. As you can see by some of the logos here, from the big insurance company to the banks, the payment firms, asset managers, and so on. So all these firms, they share one thing in common, and that is they have raised their hand and said that they are ready to buy fintech solutions when the right opportunity comes up. So another good news is that as we look at the background of teams that we talk to, 85% of these corporate champions actually make the decision, the buying decisions here in Hong Kong. Part of it because of the regional headquarters being in Hong Kong, or the fintech innovation team is based out of Hong Kong. So again, great news for B2B fintech companies. Okay, so I think with that, I just want to leave with you that, because I think there's just so much great sharing by our other esteemed speakers, but this is my information that you can feel free to contact me. So with that, maybe I think I just want to quickly sort of segue to the next section, which is the more exciting piece. And I would like to just quickly introduce our speakers today of the panel. So let me start with lady first, so Stephanie Leung, head of Stashaway Hong Kong and the group deputy CIO. And then we have another great guest and good friend, Jason Tay, and the global coordinator and regional director of business development at MDEC. And then also another great friend, Helene, who's both the general manager of Fintech Association of Hong Kong and also the co-founder of Go Impact Capital Partners. It's an amazing ESG firm. In case you're not aware, actually, Helene actually has a global ranking as a KOL in the ESG space. So go follow her in case you want to learn more about ESG. Now, so without further ado, perhaps I think I would like to start with some questions to warm up. So maybe we start with Stephanie first. Again, you guys have been doing so well in Singapore and Malaysia. So can you share with the audience about the reasons why you choose Hong Kong? Because obviously you've already sort of set up your operation here. So can you share with us about the thought process behind and the top reasons why you chose Hong Kong.
Yeah, thank you very much, King, for the very, very kind introduction. Again, my name is Stephanie, and I represent Hong Kong, Stashaway Hong Kong. Stashaway was actually founded in Singapore about 5 years ago by our 3 co-founders, and Hong Kong is actually our 4th country to launch. However, of course, we started a preparation work in the middle of COVID. So I joined Stashaway in April 2020. That was in the depth of COVID. And I still remember back then, I mean, we were thinking, like when I decided to join, we were kind of debating whether Hong Kong is a good destination for our fourth market. But I think ultimately, we actually found a lot of attractions from Hong Kong. I think the top ones include, number one, that it's very, very similar to Singapore. So very specific to this audience. I think both Hong Kong and Singapore are financial centers in Asia. Both of us have a very, very clear regulatory framework. And I mean, frankly, great regulators. We've been working very closely with MAS as well as SFC, and they have been very, very, I think, helpful in terms of like helping us to get started licensing. I think also the regulatory framework is very, very clear. So I mean, that creates a very, very good environment for technology and fintech, in particular fintech startups. Also, I think that both Hong Kong and Singapore are very, very business friendly. And of course, like thanks to friends at Invest Hong Kong and also the community, including Cyberport or Fintech Association, I mean, we were able to get a lot of support from the community, and it's been a great experience. So that's kind of on the similarities in terms of our markets and the regulations. I also think that when we look at, of course, the business potential, Hong Kong and Singapore both share significant business potential in terms of wealth that is concentrated in these 2 cities. As King has mentioned, I mean, Hong Kong is, of course, one of the wealthiest cities in the world with a lot of high net worth customers and also private wealth. And that is exactly the target that we are trying to address. In particular, when we look at the stats relevant for a robo-advisor, we look at the money that's still sitting in the bank that is not utilized, not invested. And what we've found is that both in Singapore and Hong Kong, roughly 40 to 50% of liquid wealth actually still sits in the bank. And these days, of course, there's 0 interest rate that these investments or these savings can earn at the bank. And that's what we're trying to mobilize. I guess the common value that we are trying to drive in different markets is to empower everyone to build wealth over the long term. And that money in the bank is basically where we're trying to drive these long-term returns. And it's similar across Singapore and Hong Kong for that part of the private wealth. So I think, I mean, those are some of the key reasons why we selected Hong Kong as our expansion city. And I mean, we launched our service in April this year, so it hasn't been long, but I would say that it's been positively surprising from a business point of view as well as a support point of view.
Yeah, this is great. Again, I learn something new every time I've been on this kind of panel. That 40-50% number, I will remember that. That's a good stat. Now, I guess if you don't mind, can you share a little bit about your roadmap too? I think this is great in terms of sort of the past sort of rationale in deciding Hong Kong, and obviously you have some other future planning. So is it okay you can share the audience about some of the near-term planning that you have for the market?
Yeah, I think we've identified Hong Kong as one of our key markets. So I mean, we're planning to invest quite heavily in Hong Kong. Investment in terms of both marketing. So we actually need to get, because robo-advisory is still quite, I think, quite early in Hong Kong. It's been quite well established, for example, in Singapore, but in Hong Kong, we don't have a lot of players. There is not a lot of brand awareness. So we'll be investing in marketing to try to bring this concept to the general public in Hong Kong. I think in Hong Kong, we're very advanced in terms of virtual banks or even virtual insurers, but virtual investment is something that's quite new. So that's one, I think, one area that we're going to be investing in. Secondly, we will be expanding the team. So we actually have a local team in Hong Kong. It's not a big team now, but as we expand the business, we'll be investing in hiring talent from Hong Kong, because I think in Hong Kong, we cannot just, we have very, very good talents here. So it's not just serving the Hong Kong audience, but also we can actually leverage the talent in Hong Kong to serve the regional, our regional business. And I think lastly, I would mention about, of course, like the Greater Bay Area, which is a big opportunity for us in wealth management, especially with the expected launching of Wealth Connect. So with that, we can sit in Hong Kong, just kind of maybe have the relevant licensees in Hong Kong and be able to serve a much bigger audience in the Greater Bay Area and beyond. So I think those are some of the areas that we'll be focusing on.
Yeah, thank you so much, Stephanie. I think just as a reference for the audience in the wealth tech space, personally, I've been following this market very closely and for the past 10, 15, 20 years. And one thing that I'm constantly baffled, so how can normal people be able to read all these technical charts, right? The trend lines, the candlesticks, and area waves. I think normal people can do that. So you have to have the right tools to help them to make better decisions. So I think I'm personally very excited about developments of a robo-advisory and this kind of tools to help people make better decisions on investment.
Yeah.
Now, so maybe we can quickly segue to Jason on MDEC. Again, you are now incorporated in Hong Kong. Now, so perhaps we can flip this around. Obviously, I think startup is not easy. So even though you guys, you have an amazing team, very experienced, but there got to be some challenges along the way as you moved into the Hong Kong market. So can you also share with the audience about the kind of challenges that you face and how you overcame them?
Hey, thanks, King, and good afternoon to everyone on the panel and our audience. So I think the interesting thing about Hong Kong is that Hong Kong is a destination for many reasons to many people, right? Previously, before I was in MDEC, I was in banking. So a lot of the banks which I was working in had their regional headquarters in Hong Kong. So Hong Kong was always a destination of business, at the same time for dim sum and also for roasted goods, right? So a lot of reasons. But when I joined MDEC, which is a Singapore-based 11-year-old fintech, one of the things that I looked to in terms of my job scope was to expand our business into the region. Hong Kong is naturally a choice destination for the reasons I mentioned before, and also for the fact that a lot of our customers and a lot of the prospects that we are working on have seen Hong Kong as an important hub and also as a proxy into China. So I think in terms of the overall landscape, there makes a lot of business sense to use Hong Kong as a base and also as a destination of choice for commercial expansion, right? So I think some of the biggest challenge I would say in the initial onset was navigating how do you go about going to the market, right? And one of the things that we looked up was Invest Hong Kong, and how do you go about step 1 to step 5. If you go to Invest Hong Kong's webpage today, there is a very well-structured way of going about doing that. Singaporeans, we love structure, right? We love having a system teaching us A to Z, don't miss step 7. We love that, right? So from a Singaporean standpoint, and also from the position of a fintech, having information at the tip of your fingertips does provide a level of convenience. And I think that clarity was extremely important for us. So in terms of information gathering, I think it was definitely so easy. The other thing about, I think the challenges that you probably see were more of like with COVID, things do take a bit of a change, right? And are we going to be able to be physically there more often than we should? And also because, Singapore and Hong Kong had a couple of bubbles, travel bubbles, which didn't really work out in the end. So there was a bit of that. Should we go down? Should we, be physically in Hong Kong, at least in the initial stage? So that kind of took us a bit of time to get used to, right? And I think that is something whereby, as a local Chinese in Singapore, and for some of our clients, that face-to-face value is extremely important. right? And Hong Kong has a very strong resonance in terms of their culture, I would say. And also it is the home ground of many of the largest companies that are dominating the world in terms of e-commerce and also in the world of fintech. So naturally, it was a case where we want to be there, but how do we go about being there without being physically there, on at this point of time because of the COVID situation? So having a liaison, having someone to guide you on shore, without going to Lang Kwai Fong for drinks, King Leong and Mandy and the team have been extremely instrumental in helping us get across that barrier. Information gathering, understanding the runway, central bank discussions, and also licensing. I think these are things where the more information you have, the better it will be for the management of the company to make a decision whether to go in full time, to go in half time, or to go in with the exploration kind of stage. So that's the answer from my end, King Leong.
Yeah, I think you just brought up a very good point. In fact, I was on a call with someone from Latin America, as a matter of fact, this morning. So the gentleman was asking, well, given this COVID, so people are supposed to be used to, doing business meetings on Zoom and so on. So the question that he had for us was that, is it possible for him to do business in Hong Kong without being physically here? Now, so just now you sort of briefly touch on this. So can you share with the audience about sort of, I don't know, the pros and cons, or maybe whether or not it is still mandatory to have the local presence?
Yeah, I absolutely believe so, because from a human to human interaction point of view, I think that's absolutely important, right? Zoom is probably the next best alternative, but earlier we mentioned, and just before we had the call, I think Helene and yourself, and everyone was talking about, we should catch up face to face for coffee, and it seems so much like a thing of the past where it was so easy, but today catching up for coffee is like you got to plan in advance. You got to take a PCR test potentially just to have coffee. So it's that level of where the world has turned into today. Right? And all the more so, I think there is no better way to say I'm here for your business than by being physically here. Right? I mean, it's nice to say, hey, I catch up with you once in 3 months on Zoom, but when you are physically there, you can have a face-to-face discussion, and a lot of business dealings at times, a lot of the Chinese resort require guanxi, right? And also the face-to-face trust is important. So I would say that is a very important paradigm that businesses should respect, especially coming into the space of fintech and fast-moving industry types. However, I would also kind of say that from a business standpoint, it is also important to ensure that the company has a planned approach towards going about this, interaction, right? Having being on the ground not only allows you to have connections with your clients, but also face-to-face connections with people like yourself, people like the central regulatory bodies, and having a feel of the ground. I can't really kind of define it in simple English, but being in Hong Kong, just kind of sensing how things are gives you a certain viewpoint of how things are going to be like, right? And I think that gives any business leader a very good compass on how they want to plan their business strategy. Earlier we mentioned, Stephanie mentioned about wealth tech and robo-advisory and how trends are moving along. And very clearly, even in Singapore, right, you see that the rise of robo-advisory as a whole has taken flight, and also because of the fact that changes the paradigm of how companies would market themselves and what is the receiving end of that takeaway. Say, for example, in the past, if your marketing was mainly done on MRTs, on buses, in the central business district areas, right? That could have worked because people went to the office every single day. With COVID, now that's been taken away. So how do we then reach out to customers? How do we then reach out to prospects? Would that change? And sometimes not being in the market doesn't give you that viewpoint. But being physically there, where people are congregating, where certain events are happening, when to brand yourself, where to be there. And I think that's a very important point. One last thing to say is that, just to give a reference, right? The Singapore Fintech Festival, which is happening in November, is going to be a virtual event, right? I think the Hong Kong Fintech Week is happening next week. It's a hybrid where you have a physical and a virtual event. So that gives you a sense of how two different hubs, despite being very much similar, in terms of progressing financial inclusion and innovation, do things differently. But it also showcases the importance of having as much as possible that physical touch. And hopefully in the near term, we can have more physical meetings, events. Because I think deep down inside that is a very important part of business dealings anywhere we go.
Okay, thank you, Jason. I just want to share one funny tidbit. So my daughter had been noticing that my phone has been beeping nonstop in the past week or two. And she asked me, "Hey, Dad, you must be very popular. Your phone is constantly beeping. So who's looking for you?" And then I show her, those are people who have been looking for the Hong Kong Fintech Week tickets, the physical tickets, because people are so hungry for physical events. So anyway, I think for fun aside, so perhaps I just want to pick on brains of Helene. Again, Helene just basically, is an amazing person. In case, for those of you who don't know Helene, she's both a wealth management expert, now an ESG expert, and also she's at the head of the Fintech Association. She knows the entire ecosystem extremely well. So she's a great person to get to know. So look her up on LinkedIn. Now, so with that, since our topic, we just touch on the wealth management space, and this is like your area. So can you sort of share with the audience, perhaps from your back in the days as a client, can you offer some advice for the B2B wealth tech companies about the tips to sell to the wealth managers, the banks, and so on? So Helene?
Yeah, thank you so much, King, and delightful to be on this, cross-border panel. The travel bubble may not have worked, but I think, we sort of like all gathered and convened here. That is really wonderful. I think there are a few aspects, just to share, because I got a fairly long career in all the bulge bracket private banks and all that. ESG is very much part of my domain. But in terms of the overall wealth management offering, I think there are two different factors at play that some of the robo-advisors, Stephanie Stashaway, for instance, are chipping at extremely well. And that is the automation part and the unbundling of some of the more complex, way to invest. However, there is also the other end of it, which is immense personalization. Your clients still demand a personalized level of attention and offering. Despite how you automate that, the feel, that touch point need to be personalized. They may invest $10,000. They are not ultra high net worth, but that need for feeling something personalized is regardlessly there. So I think that is a struggle, that dilemma between, very rapid automation and, hyper personalization. And the other one is really, it's a very fast moving space. So as Stephanie was saying, 40% of the money sitting idle or uninvested in the banking system can be put to work more effectively if there are channels and offering to do that. But I think, that whole education, for the investors is absolutely needed. Not everybody understands the risk-adjusted returns. Not everybody knows their own risk levels just by taking a few questions about what my preferences are, and those might change over time as well. So I think that fluidity and flexibility to cater to the risk and return, despite the fact that it could be an automated platform like a robo-advisor, is nonetheless there. And last but not least, landing a contract with some of the big, or partnership with some of the big, private banks or the big financial institutions is very often a long process, in terms of the procurement, the vendor onboarding, and so on. Now, I know that there are in some cases where they can help to fast track that, but, understanding that problem statement and being able to, hit at it spot on, I think is very much needed. And I think that has proven to be some of the success cases in our business matching programs, King, that we collaborate with, yourselves, with the Science Park and other people here as well. So let me just pause there.
King, I think you're on mute, King.
Oh, sorry. Yes. So I was just saying that I understand that there are some market gaps because, as you pointed out, and also Stephanie pointed out, the whole sort of robo-advisory, the automated personalization kind of capabilities in wealth tech is still in the early innings. So we're probably in sort of baseball analogy, we're probably in the second, third innings. Now, so what do you see, Helene, as the market gaps that's just so painfully obvious that are not being fulfilled yet? So the white space, so to speak.
I think there are two, that I very frequently hear from both, the fintech firms that I, interact with, but also the financial institutions. One is still, how do you make it easy for the investor, no matter how much they invest, in understanding the whole offering and their risk appetite? Okay, so that risk appetite, sometimes it can be a blind spot, even for the investor. Okay, so I might see myself as a very balanced investor, but maybe I'm not really that balanced. And so I think playing to that, particularly in a very volatile market, and we're experiencing a lot of volatility currently and in the foreseeable future. So I think that risk, understanding that it's very important. It's one of the really big pain points. And the other one I would say is sort of that agility to respond for your clients. Very frequently, as Ruben alluded to that, but also Jason pointed out, and Stephanie also pointed out, that human to human touch. You must not lose sight of that. Robo-advisor does make it, more efficient, more streamlined, take away some of the pain points. But ultimately, that human to human, whether you're a B2B or C2C, it's ultimately H to H. Okay, so that H to H element, in whatever shape or format that goes through that process, I think that is supremely important as well.
Yeah, thank you so much, Helene. Now, so maybe I'll go back to Stephanie, because I think this is such a, I would say, on one hand, sexy topic. At the same time, it is a big topic. Now, so again, I was just trying to recall some of the conversations I had with people making comment like, oh, the Chinese are like gamblers. They don't like to rely on technology. They like to rely on their guts, right? Yeah. To make a bet. So they don't believe in the data and the trend lines and whatnot. So do you have any advice to perhaps other peers or other companies in the wealth tech space from Singapore in the do's and don'ts, right, about entering this wealth tech market in Hong Kong?
Yeah, I think you brought up a great point. And I remember 12 months ago when we were still considering Hong Kong, that was the #1 feedback I've gotten from like anyone in Hong Kong or even beyond. It's basically, don't try this market. It's all gamblers. They just want stock tips. Nobody would need a robo-advisor. And actually today we are finding this kind of whole new segment in Hong Kong, which loves our service because it is something that was not available before. I think what Helene mentioned about the risk management is something that is lacking on the market. Usually if you go to a bank, they would ask you to fill out a questionnaire, which is like the due diligence questionnaire, saying whether you're aggressive or whether you're conservative. But actually the gap is nobody can define, or nobody has defined what aggressive actually means. So even if I fill out aggressive, does that really mean I'm aggressive? And also most of the time, also the salesperson would want you to fill out aggressive because then, you get access to all the products. And this is a game that sitting in Hong Kong, we kind of all have been very, very aware of. So I think, the don'ts, like answering the question, don't assume that what you've been told is true. It's important to run tests in Hong Kong. And I think sometimes when we bring on new technology or new ideas into the market, you may find surprises that you never thought of. And also, I think if I think back in the last kind of 12 to 18 months of like developing the products for Hong Kong, I think we spent a lot of time localizing the product. So in terms of don'ts, I think don't assume that localization is just a translation. It's much more than that. We actually have a local team in Hong Kong that really cater the product to the local needs of Hong Kong people. which I mean, I would say 80% is the same across regions or similar to Singapore. But I mean, there are nuances in terms of how people understand marketing messages or just the product itself. For example, USP could be slightly different. So the USPs that worked in Singapore may be different from the USPs that work in Hong Kong. I would say in Hong Kong, for example, the concept of being able to, like for Stashaway, the concept of being able to really quantify what kind of drawdown risk you are being exposed to has worked very, very well in Hong Kong, because I think, and linking back to the previous point where I make, why is there so much money sitting in the bank, is because most people actually don't have a good idea, or are actually afraid of putting money in investment because they don't have a good idea of how much market volatility could be, especially during drawdowns. So it's a slightly different USP than what we've used in Singapore, because I think in Singapore, people value the automatic systematic part much more. But in Hong Kong, we found that, I mean, risk actually is very important. In terms of, I think the do's, I mean, definitely leveraged the community in Hong Kong. I think, I mean, it's been very, very supportive. We've worked with Cyberport, we've worked with Invest Hong Kong and Fintech Association. So make use of all these support in Hong Kong. And I mean, I feel a little bit split about whether I should say this, because we talk about robo-advisors coming to Hong Kong, of course, and by definition, we're talking about some of our competitors. But I would say, I would just come to Hong Kong. We need more people to bring awareness, to bring good products. So do come to Hong Kong.
Great. Well, again, I think this is something that this is not a zero-sum game in a way, because as we are looking at, I think the capital, right? It's not about competing market share among the wealth tech companies. It's a compete against the money, the cash sitting idle, which is a big part. Yeah. So I think perspective is, I think this great perspective. Now, so I guess we have a good sort of a couple of minutes to talk about wealth tech. So maybe we can sort of transition to Jason. So perhaps you can sort of help the audience to understand a bit more about your business, because obviously you are a bit more unique. And then at the same time, there's a reason why your firm has been so successful in raising different rounds of funding. And how is that sort of strength be able to sort of help you to get into the Hong Kong market?
Hey, thanks, King. Before I give my piece, I just want to kind of make a quick comment on earlier you mentioned about the Chinese, good at gambling, and then the earlier point about keeping money in the bank. Some of the companies keeping it's a nice dichotomy, right? And because I just want to kind of say that, because I think in Singapore, you look at the people queuing up to put money into the lottery. It's longer queue than McDonald's. At the same time, my mom and dad would me say that Chinese New Year is the best time to gamble, and all of a sudden, you feel like you're in gambling streak. But that's the cultural element of things, right? And I totally agree that the population should be in many ways educated, with the right ways to use the tools in the fintech space to really enhance their financial inclusiveness. So I'm fully behind that, and personally, I'm also a user of Stashaway. So thanks, Stephanie, for making us a bit richer. And so back to MDEC, right? So MDEC is a 11-year-old fintech company started in Singapore. I know the word MDEC is a little hard to read. The actual meaning behind the word MDEC stands for multi-currency denominated automatic quotation. Try and say it in one breath, and you get an award, right? The easier way to understand MDEC is because if I were to use the analogy of the NASDAQ in the US, so it's actually a play on the word the NASDAQ. And the important element of why we named it MDEC was because 10, 11 years ago when MDEC was founded, the idea was to create a multi-currency solution for stock trading, right? Because as you know, today in the world, with the exception of the US being a main hub for investing in shares, many parts of the world in exchanges, generally, stocks are invested in the currency of the country where the exchange is based in. So that restricts people that are from outside the country to come into the country and potentially invest in the market because of foreign exchange concerns, right? That is a big kind of inertia that prevents external investments from coming into the country. So 11 years ago, my CEO and our founder, Richard Cole, came up with this idea. He was a banker. He said, hey, maybe there should be a way to create a multi-currency solution to enable exchanges to sell their securities in more than 10, 15, 20 currencies of the world. So that, for example, having someone, to be in Singapore or Hong Kong, imagine being able to buy a Thailand-based security in the stock exchange of Thailand in Hong Kong dollars on Sing dollars, right? Directly at a live foreign exchange pricing where there is a bid and offer, there is a liquidity pool. So imagine being able to do that. Then all of a sudden the Thai exchange would feel like it's like buying from your home exchange because you're buying in your home currency of choice. So that was where MDEC kind of started off our journey. And along the way, we kind of had a bit of pivot into the world of e-commerce. And that was important because in 2015, Ant Financial invested into MDEC in Singapore. And we started building out a state-of-the-art FX platform for Ant Financial. And AliExpress is the platform today. If you were to go to AliExpress, the foreign exchange solution that you see right there, being able to buy a item, be it a handphone cover, be it a jacket, in your home currency of choice, that is powered by MDEC, a Singapore company of 75 people strong. Right. So I think that's really where our two main key themes have been. And Hong Kong essentially is a very important market for us, if I may also kind of add on, because a lot of the e-commerce plays, like I mentioned, AliExpress and Financial, they have their regional treasury centers based in Hong Kong. And that is an important space because a lot of the foreign exchange is then managed by the teams that are specialized in Hong Kong. And not just that, but from a settlement perspective, Hong Kong is, the world's premier renminbi settlement, CNH clearing kind of hub. So that is a strong kind of benefit of being in Hong Kong because you have that bandwidth, you have that direct connectivity to the clearing. The Hong Kong dollar is one of the most freely convertible currencies in the world. In Southeast Asia alone, if you look at most of the currencies, Singapore dollars, Hong Kong dollars are probably the only two that are freely convertible. So naturally, that allows companies that function in Hong Kong to be able to kind of manage that from a Hong Kong dollar, US dollar, freely convertible currency perspective, and also as a proxy to China, where it is the gateway to the world's largest manufacturing service kind of economy. So I think from MDEC's perspective, as you can see, we are mainly B2B. And also from the nature of our innovation and technology, we're trying to bring more use cases to mega platforms in the e-commerce space, the fintech space, and also in the stock exchange space, in brokerage, etc. So Hong Kong definitely has that allure. And I would say that, through that learning journey, if you've seen what I've mentioned, heard what I've mentioned so far, when we pitched it to ourselves, it made a lot of sense. It's like, okay, Hong Kong is the place to be. Yeah. So that is my quick 5 minutes on this field.
Great. Thank you, Jason. Now, I just want to also pick on Helene's brain before we open up to the Q&A. Now, first of all, I just want to also hit the call from Eunice to the audience. Please send in your questions because, again, we have all these great speakers here. So pick on the insights. I mean, again, they are here to help you. Now, so with that, perhaps I'll leave Helene with the last question before we go to the answer Q&A, and that is now, so shifting to your role at the Fintech Association, GM. Yep. So obviously a lot of companies come to you for help. So can you sort of share the audience, typically what's the top 1 or 2 things that the fintechs will come to you for help?
I think the most, if I group them into the different degrees of seriousness of the help that they need, the top of mind is really the ability to quickly match with, either partners, investors, business people. So, it's rarely just, join the Fintech Association or meet with, some of the regulators or others just for a networking. So I think the word networking has been really, done to death. People don't just network for the sake of network. Usually they are fairly purposeful. and say we are looking for contracts, or we have this solution, we're working on that in Middle East or in Singapore, and I'm looking for people that might need that here. So it's a very purposeful kind of matching. That's the first one. The second one, I think, would of course be tapping into some of the wonderful signature accelerators or incubators, or programs that yourselves, King, Invest Hong Kong organize a lot, like the Fintech Week, like the Start Me Up Festival, and all that. These provide wonderful opportunities for people to meet each other, and also to fast track, to accelerate their businesses. So I think those two things are typically the most in demand, so to speak, King.
Great. Thank you, Helene. Now, I see that there's some questions, so maybe I'll just quickly address them again. So feel free to send in your questions now. This time is for you. Now, the question is, so I think this is for me, and let's see. So from our experience, how open are investors, family offices, etc., in Hong Kong to adopt fintech? Now, I think the answers are twofold. Number one, to adopt as a user versus adoption as an investor. Okay, so let me just separate the two. Now, as a user, now definitely I think the family offices, I don't claim to know all of them. Now, to be honest, I think this is a major sea change. As a matter of fact, started just over a year ago. That Invest Hong Kong, I have my other team, a separate team of colleagues responsible for attracting family offices into Hong Kong. And also there are some policy rule changes, if you will. One of them is called the LPF, the Limited Partnership Fund regime, that basically makes it easier for the funds to set in Hong Kong, to make it like super competitive compared to other jurisdictions. Now, and since that LPF was launched in August of last year, I just talked to someone from that domain, as a matter of fact, just last night. Over 360 funds have been set up in Hong Kong. And some of them are family offices. And I say, wow, this is within a stretch of a year, like 350, 60 funds have been set up. So there's a lot of capital coming in. And naturally, these guys are looking for investments. So that's why I think when we look at from an investment standpoint, the question is easy to answer. There's just a lot of capital now. They're looking for ways to put their money to work. So besides the public equities, obviously a lot of people are interested about the private direct deals because it's more sexy, it's interesting. So that's why I've been getting just a lot of attention. Now, in terms of segments, of course, fintech, a lot of different segments. Again, digital assets, NFTs are just literally on fire. Because I think for those of you who are not familiar, surprisingly, actually, I just noticed this in the past few months. Actually, Hong Kong is the second largest arts auction market in the world, just behind New York City, and just recently surpassing London. So because of all these, private wealth, they would like to buy arts. And now that digital art is catching on and NFT is cool. So we just had this digital art fair in Hong Kong just last week. And it was just jam-packed. And you can just tell from the enthusiasm of people attending the digital art fair, this is exciting. So a lot of investors are looking for that. So yeah, that in a way, you can call that an adoption from an investment perspective. Now the user side, as I just mentioned, is mostly the banks are definitely on the forefront because of the push by HMA. Now, so I think perhaps I'll just pause here because I would also like to see if there's any other question, and if not, I guess I'll turn it back to Eunice because I believe that Eunice may have something to share with the audience.
Hey, thank you, King. Let's see. There's no more question from the floor. Yeah, we are almost 5 minutes to wrap up the sessions. I just want to make the last call. If you have any questions, please post it now. Otherwise, we should end the sessions in time. And I would like to take this opportunity to thank you so much, King, Helene, Stephanie, and Jason with us today, and really, really appreciate your sharing and insights I believe that this is just like a perfect timing and a good sessions for our upcoming festival, for Singapore Fintech Festival, which is on 8 to 12 November, and also Hong Kong Fintech Week, which is 1st to 5th of November. So this is a great awareness we created, and we are really looking forward for these big upcoming big events. So let me see. Okay, there's no more questions in the Q&A. And if you still have any questions, and you can always write to us at events@singaporefintech.org. We will answer accordingly. Otherwise, thank you everyone. That ends our sessions for today. And I hope that you found this afternoon's sessions informative and useful. And I would like to request your assistance to completing the survey form when you exit the webinar today. And we would love to hear about your feedback and suggestions that you may have for us. So thank you everyone, and goodbye, and see you in the next sessions.
Okay.
Thank you.
Thank
Bye-bye.
you.
Thank you.
Thank you,
Bye.
everyone. Thank you.
Bye.
Bye-bye.